Welcome to the Digital Digest, your weekly breakfast of insights, tips and tricks, and general information that will help anyone trying to move things forward in this digital world of accounting. This show is brought to you by the digital disruptors who are at least attempting to push the boundaries in this digital accounting space. I'm your host, Ryan Piercy, and I'm joined by John Toon as we crack on in this episode talking a little bit about accounting stuff, which is going back for what feels like a decade now to making tax digital and its constant slow rollout through the accounting industry. So, John, look, if anyone's been hiding under a rock for a decade, what the heck is making tax digital?
Thanks, Ryan. Who knew that we were going to be covering an accounting topic today? It's
crazy.
I guess a brief overview of what is MTD is essentially this is an initiative led by the government, HMRC, in theory to sort of transform the UK tax system to make it more effective, more efficient, make it easier in theory again for businesses, individuals, etc. to manage their tax affairs. And the idea, the concept of it was to cover the three main taxes that we're all familiar with. So income tax, corporation tax, and VAT. And obviously, as you said, we're kind of in this middle ground now where we've got one of those things in, we've got another one about to come down the track, and then corporation tax a little way off. The other sort of, objective of this is to try and close the tax gap, because it was felt by HMRC and various governments that either through dishonesty or honest mistakes that the amount of taxes being declared was not always accurate, irrespective of the fact that people like you and I were involved in this and helping people to submit returns and things. And so this concept of digitizing means that they can close that tax gap. Interestingly, the tax gap in the UK, the largest area of underperformance, if you like, is in corporation tax amongst small businesses. So the fact that corporation tax is the last thing on the MTD agenda to be dealt with, it really doesn't really lend itself to this narrative of trying to deal with managing the tax gap effectively. But I think overall digitization is the way that people want to go, and I guess more recently, of course, we've had this announcement by government that they want to move to e-invoicing in the UK as well. So I think this is all just a part of a wider wrapper of digitizing or trying to encourage organizations, businesses, dealing with the tax system and dealing with business to become more and more digitized. And this is maybe the stick, if you like, rather than the carrot that could be used to encourage this and incentivize people to move.
Yeah, I mean, it's definitely a stick. There's been a lot of frustration in the, it's definitely small business space on the impact on them. And yeah, I mean, I can't believe that this was announced back in 2015 now by the former Chancellor George Osborne. It's nearly a decade old, and the intention was that it'd be in place in 2020. And what they originally set out is not really what it looks like now. They envisaged collecting a vast amount of data to be able to kind of really see into the granularity of what was going on. They watered that down to summary information. And I think that once you start doing that, although it's forcing compliance, you're not really understanding what's delivering the figures, which is what you need to fix that tax gap. So I think they made an announcement. They felt they needed to do it. They felt it would still help, but it's definitely not going to achieve what they originally hoped. But we've still got it, right? We're going through it. It's still here to some extent. We have Making Tax Digital for VAT, which came in 2019, I believe. And we've now got Making Tax Digital for income tax, which is going to come in 7 years later in 2026. So, I mean, there's quite a big gap there. And I can only assume that all of these delays come down to HMRC systems.
I think you're probably right. I mean, HMRC notoriously have bad systems and bad setup, and I guess the sort of the equivalent comparison that I can think of is that they're a little bit like the high street banks that we all deal with, in terms of we used to have the Inland Revenue and HM Customs, and then that sort of got merged together. They were all operating on different systems for different types of taxation. And as they've increasingly tried to plug more and more things into this, they've realised that either the system's breaking or it's not quite as effective as they maybe thought. I think there were contracts of upwards or potentially over £1 billion offered for helping HMRC to digitise more and more of their internal processes. We do also ironically know, I mean, this goes back to your comment about the data, is we do also know that HMRC are running things like AI over a lot of returns that are submitted to kind of benchmark them against other returns from equivalent businesses or equivalent types of individuals to sort of start the process of identifying possible opportunities for investigations, or maybe indicators of under or over declaration of taxes. But as you say, the data doesn't really go with it, and we saw that with HMRC MTD for VAT. Sorry, was that everyone kind of anticipated that the detailed reports that underpin the returns that we submit would start to be provided to HMRC. Obviously cause concern amongst organisations that prepare VAT, but ultimately you kind of think, well, that's the first thing that HMRC ever asks for when you have an investigation on a VAT return. It's like, can I see the details behind this? And so if you were providing that on a regular basis, if you've got nothing to hide, I can't see how that would be too much of an issue. And it's all there in the software because it's prepared in the software, it's there by default, and it would be really easy to transmit that across to HMRC for them to at least start to sort of score and benchmark with more data what's going on. I think there was a couple of things that particularly around the MTD for income tax delays that came about was, yes, HMRC were unprepared, but also I think the market in general was unprepared. I know a lot of software vendors have worked very hard to get ready for it, and then the timetable was changed massively. But I suspect there was some government influences over that in terms of they didn't want this to sort of suddenly be in the public domain and maybe cause some upset amongst people. But have also you looked at the market, and a lot of accountants, I guess, are sort of twice bitten, once bitten, twice shy with this, in terms of they have seen previous delays with all of these things, and so they were not engaging in the process either, which doesn't really help because we are effectively being asked by HMRC to be the marketeers for MTD projects, which is not what we're supposed to be doing. But unfortunately, that's where we're at. And if we're not engaging with the process, then no one else is really engaging with the process, unfortunately.
Yeah, exactly. So yeah, I agree. I think there's been a lack of availability of software, but if you think about how quickly the VAT side came in, I think software vendors can pivot quickly if they need to. But there's been changes that happen through the VAT cycle. There's been delays, and I think it's, we just assume as in this space that it's going to happen again. So it's like, why do I start going onto a beta now when I know that they're going to tweak the entire way the system connects because the way the data is going across isn't sufficient for them? Why would I want to rebuild? Because all you're doing and investing time is dead time. So I can understand that, right, from the software vendor perspective. But if we talk about what's been the impact on businesses, so when VAT rolled out, essentially they said, okay, well, you need to have digital systems, but digital systems was incredibly broad. You could have a spreadsheet. But the main thing they said is the digital links aspect of that. So when you've collected information digitally, you need to then have a digital flow all the way through to submit it to HMRC. They didn't essentially define what a digital system was. They left that kind of slightly up to interpretation. There were examples, but there was lots of, I guess, as you'd expect with HMRC, questions around, well, what happens in this scenario? What happens in that scenario? And this was a big thing, I think, that was missed from a lot of not only businesses, but also accounting firms, individuals, is that the digital links aspect meant that you had to connect systems together. Bridging software is great. You can use Excel spreadsheets, but you still need to connect systems together. There needs to be a flow. If you're putting something into an Excel spreadsheet, you need to get that via an import with some basic manipulation, not manual, but code-based manipulation into a HMRC report. And there was lots of areas that weren't covered. Group VAT reporting wasn't covered for most systems. Partial exemption calculations weren't covered for most systems. And so you still came down to bridging software, which had to fill the gap for this. And we're still in that same place. I don't think that's been resolved, John. Like, for ages, we've been asking for a really good VAT tool that can plug into multiple systems, suck out the data, create your more complex returns. I thought there was going to be one that was developed a little while ago that was going through the early adopters hub didn't quite get there. But we've still got these gaps, and I assume that's going to happen with the income tax side as well.
Yeah, it's a weird one, isn't it, the VAT thing? Because I guess in some respects, for a lot of businesses, the actual physical pushing of the button and submitting the VAT return didn't change with MTD at all. Many businesses were submitting through software already. Yes, there were still many others that were going through the HMRC online portal as well, but fundamentally that didn't really change. And what it really did was it caught probably the smaller, simpler businesses that were running their tax affairs on Excel and who were able to use bridging software. I mean, my general feeling is that use of bridging software has dropped away, particularly for businesses with relatively straightforward VAT requirements. And as you say, you then sort of left probably with the more tricky, more challenging ones that are there. And you're absolutely right. It's the edge cases that are not particularly well catered for. So the partial exemption stuff, the group VAT returns, etc. Some software will do it. To be fair, others will not. So, for example, Xero weren't able to do it to begin with, but then now have a functionality to kind of pull it together for a group VAT return point of view. Products like Xledger and iPlicit can let you do group VAT returns within their system, and a lot more straightforward. But partial exemption still continues to be a challenge, and I guess it's always going to be that, because you've got to do those manual calculations, and you've kind of got to review the return that review process quarterly and annually for things like partial exemption, and the only way you can often do that is to do it in a spreadsheet. It's not particularly easy to do it in accounting software and be comfortable that you're covering all the bases. That point you make about digital links, though, is probably the most challenging one, and I think HMRC realised it was the most challenging one because they didn't implement that side of the requirements immediately, and they also didn't implement the penalty regime aside that. I must admit, I'm yet to find a business that's had a HMRC review of anything where they've actually looked at and checked digital links in the system, or even asked about the accounting system or the accounting operations in terms of how things are being pulled together and where the data is coming to and from. So I would say, at least in my experience, which is relatively limited, I'll admit, the HMRC is still not looking at that digital links element, not looking to utilise penalties to punish or incentivize businesses that don't comply with the rules. But yeah, I think the weirdest challenge that I found in all of this was that, for example, you could have a shop using a POS system that didn't have to link that to their accounting system, but could just use the TED reports and the till reports at the end of the day and post that into accounting software. Well, the irony is like that's incredibly manual, and it's so much easier to get just a really good POS system that connects into an accounting product and have them plumbed together and working in sync. Like, why would you not encourage organizations to get rid of what is, for me, a big administrative burden and allow them just to carry on with old school, ring up tills that print out a Z report at the end of the day and are not particularly efficient.
Yeah, and I think the main reason for a lot of this is that everyone flagged the cost. Oh, I have to change system. I have to buy a system here. And HMRC never rebutted with, yeah, but you need to consider the efficiency gains that you can achieve from doing that through the lack of manual process you need to now do. And if they'd talked around that a lot more, they could have brought in a scheme that deferred, he said if you, which they did to some extent, they brought in these digital schemes that said there's a grant. But if they said, there's essentially a loan scheme that said, we'll cover your upfront setup and you repay that over, it could just be a year, 2 years, because of how quickly you can recover from the efficiency gains of implementing these modern systems, then I think that would have gone down a lot better, right? Say, okay, we understand your frustration here, your challenge from a cash flow perspective. Let us support this because it's a gain to us and it's going to be a gain to you long term. But we understand the short-term pain. But there was nothing of that. I'm not even sure they were aware of the efficiency gains that could be achieved, the stuff that we know, that we talk about all the time. But yeah, it was an odd one. And as you say, a lot of businesses, they already had digital systems. They just had to effectively plug into the MTD portal, not that difficult, and hit the submission. And it only affected businesses that were above the VAT threshold first, and then anyone that filed VAT. But we now have more businesses that are going to be affected with the Making Tax Digital for income tax announcements that are coming 2026, and the threshold initially is 50,000, isn't it, John?
It is, yeah, that's right. And I mean, quite where this threshold comes from, who knows? I mean, at least with VAT, we had a registration threshold, and as you say, now dropped to pretty much every VAT registered organisation. And I guess we don't need to get into a conversation about whether the VAT registration threshold is appropriate or not. But yeah, effectively, just to sort of recap the rules for MTD for it, there is that self-employed individuals and landlords with an annual business or property income above 50,000 will be caught in the rollout, which is now going to happen from effectively April next year. Although I guess if you talk to a lot of the software vendors, they're encouraging people to start now in terms of considering implementing software, so that you're kind of starting to catch the early days of this. And of course, you could take part in some of the beta testing that's happening. And then from April 2027, that will reduce down to a 30,000 threshold. And then also just recently, the government announced that threshold will likely drop to 20,000 in the Parliament term. So within the next sort of four years or so, or 4.5 years. We don't have a fixed date for that 20,000, but that will capture a significant number of individuals and landlords, really. So it's going to be significant. And the requirements are pretty much, as you kind of expect off the back of MTD for VAT, which is you've got to maintain digital records of your income and expenses. You've got to now submit quarterly returns via the MTD compatible software. So that is a major change for income tax, because that's never been a requirement before. And then you've got this concept of an end of period statement, which is effectively your tax return, which is going to be submitted. And that's going to be submitted through MTD compatible software. I think for most accountancy firms, delivering income tax services, that end of year submission or that final tax return submission is probably not going to fundamentally change. We're probably going to continue using our income tax software and everything else to do that. What we're going to have a challenge of, though, is number one, can that income tax software pull up the quarterly submission data and aggregate that for you, or are you going to have to connect into the core bookkeeping software to get that data in there, just to sort of supplement the requirements that you have in terms of that final submission and declaration. So it's going to be interesting. I mean, the irony with all of this, and I think we talked about this a little bit previously, is that if you were going to start with MTD for VAT, which makes a lot of sense potentially, because that should have been the least heavy lifting requirement in terms of the change, why didn't we then just go to corporate tax? Because I'm pretty certain, I don't have the stats in front of me, but I'm pretty certain there are more corporate tax paying businesses and organizations that also do VAT than there are income tax payers, particularly landlords, because obviously you can't be VAT registered if you're a landlord anyway. And so the next natural step should surely have been corporate tax. And we talked about the fact that the tax cap exists, the biggest part of the tax cap exists in corporate tax for small businesses. So the logic of rollout here is just a little bit all over the place from my point of view.
Agreed. And I think the annoyance is that they announced a while ago, before they delayed the making tax digital for income tax element, that it'd be 2026 for corporation tax, and then they've just been silent on it. So I'm pretty sure it's not going to be April 2026, but there's been no testing of any systems, no announcements of testing any systems, but we don't know when. There's still that completely that black hole of communication of when we'd be doing anything on corporation tax. Personally, I think you're right. It's going to be still easy, or relatively easy, compared to what's happening with an income tax perspective, because most businesses are going to already be on systems. It's then going to be up to the software vendors to connect in the right way. And a lot of these systems nowadays have already built a corporation tax element that you can plug in, because it just makes sense to make it easy for businesses to submit the corporation tax if they're already in digital systems. So they've already been preparing. It will just be about connecting that setup to HMRC setup, so that should be straightforward. But the income tax side, I think it was flagged nearly 800,000 businesses are going to be affected by this when it comes in. That's a huge impact and a huge cost really to businesses. You've had you've had generally costs going up anyway, so businesses are struggling, they're starting to fail, and we're now hitting them at the same time with a requirement to also keep their records digitally in a way that you can connect and submit to HMRC. So timing is probably not the best, but once it was announced, it's just trundling along.
Yeah, and I mean, as you say, it very much is trundling along because it's been so sort of up and down and all over the place, and it's a little bit like pushing the trolley with the dodgy wheel around, isn't it? It sort of feels a bit like that. I mean, I think that my only comments on sort of MTD for income tax is that yes, we know the impact's going to be significant. You know, the use of bridging software, I think, is actually going to be lower than maybe we expect. And certainly what we experienced with MTD for VAT, just because I think it's just so much more challenging to do bridging software for income tax and to make it work effectively. And I think the requirements to keep those digital records would also be relatively challenging. I mean, I guess, you know, if you think particularly about, you know, landlords, maybe smaller landlords rather than larger ones, is that, you know, they really operate just on what comes in and out of the bank account, you know, so that, you know, I know some of our landlords, for example, they would literally just at the end of the year send us the bank statements and say, here you go, summarize that. This is my income and expenditure for my property business. And if they've got, you know, 2 or 3 properties and they're lucky enough to be above the threshold, or even if it's a bit of a sidebar and they have other earnings, which means they have to do a personal tax return, is that these kind of landlords get caught, and it's kind of like weird nuances of, you know, you might have to prepare a tax return because you're a high earner, which, you know, obviously is a very, very nice place to be if you are. But if you've also had a property that you moved out of and you just happen to rent it on the side and you earn, I don't know, £500-600 a month from it, something like that, then you're going to be caught by these requirements, and that's going to be a fairly significant change. I guess, you know, the one thing that has been announced from the recent beta testing that's happening with MTD for ITSA is that some of the more, let's call it like half-baked software has started to be kicked out of the beta or been delisted by HMRC as being approved. I think this is a good thing because I think, you know, to encourage taxpayers to utilize software, there's got to be good, high-quality software. I think if you're seeing, you know, I think what we saw with MTD for VAT was there were a few bits of software that were approved by HMRC, particularly bridging software, which wasn't particularly great to use. It wasn't good quality. And when you actually looked at the costs of doing it, it was quite expensive in comparison to being able to go out and maybe grab FreeAgent or a Xero or a QuickBooks, which would only cost you maybe marginally a little bit more or potentially been free anyway. And so I think the fact that HMRC have been a bit more proactive around software and whether or not it meets the requirements and things is really good, and that should hopefully be to the benefit of taxpayers in the longer term in terms of, you know, not feeling that this is a burden just to comply with a set of requirements, but you're going to pick up a piece of software that is maybe going to be useful for you in the longer term in terms of maybe giving you some more insights about what's going on with your property portfolio, your business income and stuff.
Yeah, and I think, you know, this is a tech show, so it's right to talk about the tech, John. And we were talking too much about accounting for a while. So, all right, let's give some options of what businesses can do in this space. Because I guess when the VAT regulations came in, it was basically like you have to pay for something. There's very few options where you could avoid making a payment. But there are free options. You might need to jump through a few hoops, but there are some free options for the MTD for income tax element. You've obviously got FreeAgent, which you mentioned. As long as you've got a NatWest or Metal account, you can use FreeAgent for free. And it is a very good piece of software now. So if you need to do, I guess, you know, a lot of your reporting, you could do that through FreeAgent. Other tools I know that have been offering out free elements are Sage. They've brought in a free tool for micro businesses that will help the MTD filing. It's worth considering as, you know, utilizing something like Sage. And then you've got something that I don't think is free, but it's definitely very cost effective and had a massive impact on the recent acquisition will be DexSolo, which you know, is built specifically for those very simple trades, sole traders, just doing income expenditure stuff. And you know, that the fact that works, it has a presence, it has OCR technology that means you can just take a picture and you basically get your expenses in, has created a huge sale price for debt. So there are lots of options. But what about the solutions for landlords, John? Like, because that's very niche.
Yeah, it is very niche. I mean, I think we're yet to see if there would be any bridging software for landlords. I've not seen anything that looks good, although you could imagine that there would be landlords that would maybe maintain their records on Excel, for example. But I guess if we're looking at sort of like pure accounting software, if you like, rather than just Excel or something like that, is that I guess Hammock is the one that immediately springs to mind as being the one that's really sort of pushed the charge on this in terms of trying to get into the landlord market, and in particular, being there for what I would say is like a nice, easily accessible piece of software to help you manage a portfolio, whether it's a single property or whether it's multiple properties. It is entirely residential property based, pretty much, although it will accommodate sort of commercial property as well. But really, they're going after the residential market, and and it's reasonably cheap as well to begin with. You pay on a sort of per property basis, and they accommodate all of the nuances that MTD for ITSA requires in terms of shared property ownership, single property ownership, all those kind of things. So they do make that sort of things relatively easy. FreeAgent also have a landlord's solution as well, and I know that when I last spoke to them, they were kind of revisiting that a little bit, because I guess the extra time that's been given to a lot of the software providers who had built in readiness for the previous launch of MTD for ITSA, which was then postponed, has meant that where they maybe had rushed the product a little bit, possibly to sort of meet the deadline, is they've now got themselves an extra 12 months or so to kind of redevelop or improve the look and feel of those products. So that's where they're at. And then there's a whole bunch of other products like Arthur and Released as well, which will also deal with property. A bit more sophisticated, a bit more complex. Certainly Released is more aimed at commercial property ownership or mixed portfolios. Arthur's definitely aimed at sort of again, typically residential properties or a mixed portfolio, but at the larger end of the scale, with sort of probably upwards of 5 properties plus to kind of start your journey with them. But all of them, all of them look good, and then all of them do integrate into other accounting software as well. So it then allows you to do all of those things. And I think the biggest challenge for landlords, particularly if you do have other business interests or you're having to do a personal tax return for other earnings, is that it's just combining all of these things together in one place is going to be the biggest challenge. Like if you're purely a landlord, great, go and get some landlord software. If you're purely you're a sole trader or partnership, go and get some accounting software, some bookkeeping software. But what do you do when you need to bring the two together? And I think that's where potentially FreeAgent have got a great solution there. Hammock integrate with some of the other main players like Xero, Sage, QuickBooks, etc. So I think you're going to find that people who are sort of stuck with both of those are going to start pulling them together into one place.
Yeah, and you've also got Landlord Studio come across from the US, similar setup to Hammock. What I love about Hammock is the way you can just connect it into your bank and set rules. So even if it's got, you've got a hybrid account using personal and business, you can separate the business, the rental transactions. So you don't need to go out and set up a separate bank account. I always advise doing that anyway for anything that is business or income related. But it's not something you have to fundamentally change. And then you've got the one that was huge and then disappeared, but it's kind of relaunched, which is Coconut. That was one of the bigger names when we first thought MTD for income tax was coming out, and kind of then went quiet, struggling financially because of the delay, and was bought by, is it Go Simple Tax? I'm trying to remember what it was. Yeah, Go Simple Tax. So yeah, they've kind of had a resurgence. They cover both the landlords and self-employed side. But I would say if you are in the space, either as an accountant trying to help your clients, or as an individual trying to find the right solution, make sure that whatever you pick works for the other party. So if you're an individual, you've got an accountant, make sure whatever you're picking that the accountant understands what it is. And similarly, that if you are an accountant, make sure it's going to work for your clients, because there's so much choice out there. You need to make the right selection for your client base, not necessarily the one tool that you're used to.
Agreed. And I think if we just very quickly just touch on the final bits in terms of corporation tax, I think that ironically is the one that I'm most interested in looking forward to, because I think there are a huge number of businesses and not-for-profit organisations that are required to do corporation tax returns that are just not using good quality digital systems to do that. And I the only reason I can imagine for not having the corporation tax roll out earlier is because not-for-profits do have a requirement to submit tax returns, and there's a reasonable number of I guess to HMRC, unknown entities that should be registered for corporation tax but don't appear on their systems and not really on their radar, that would be captured. So things like social clubs, sports clubs, a whole bunch of other things which are probably relatively small but may well be caught. The problem is, because we don't know what the rules are for corporation tax in terms of a threshold, we've no idea if there's a cutoff. And also for some not-for-profits, they only have to do a corporation tax return on a periodic basis, typically 3 or 5 years. And so, again, without having some detail around those exemptions, we've got no real visibility over, would that mean that a charity that only has to do a corporation tax return, periodically, would they be excluded for the MTD for corporation tax requirements, which would be a great thing for them in terms of lowering the burden from a cost point of view, irrespective of the savings and everything else that you might gain from digitization. And we covered sort of charity stuff on a previous recording in terms of the opportunities that are there for not-for-profit organizations to consider digitizing more of what they do.
Yeah, I mean, that sounds like a perfect place to wrap this up. We've gone from the start all the way through to what's coming on Making Tax Digital. Something that I'm not sure I'd ever expect us on a tech show to be talking about, John, but there you go, we've done it. So that feels like a great place to wrap this up. Hopefully this episode's provided you with valuable insights you can take forward. Please do check out show notes for links to the digital disruptors, plus anything and anyone that we've referenced, which is a lot in this episode. If you want to ensure you catch future episodes, please subscribe to our YouTube channel and make sure you look out for the release every Thursday morning, which goes live across YouTube and LinkedIn. We look forward to speaking to you again next week. All right. I've got a huge amount to upload.